Good Sunday, everyone. This is going to be my weekly trading reflection, week 8. I took about 4 trades this week in total on Monday and Tuesday. Ended up the week being profitable. I stopped trading on Tuesday because I passed phase 2. But let's go over all these 4 trades I took, what I did good and what I could have done better. So starting off on Monday, we took a Euro GBP trade in London session. Every time frame basically looked very bearish. So bearish order flow on the low time frame, on the mid time frame, on the daily. I will show you the chart in a bit, but for the point of interest, we had basically a 5-minute order block inside the equilibrium of the current low time frame range, and we formed a double sweep right there, and this basically ended up being a loss. So let's look at why. So basically we had this minute 5 or minute 15 leg right here, this range, and we had this order block also right here. We firstly formed an inducement just below it, and then we swept it 2 times, and we had a very valid displacement. So everyone started shorting right here on this fake breakout structure, and then we got a sweep, and this was basically very bearish confirmation. But the only thing that didn't make this an A+ setup is because we already tapped this hour 4 fair value gap, which was the target of the trade. So we only got a retest after hitting the hour 4 fair value gap. So I initially wanted to enter right here, but because that happened, I was a little bit skeptical, and I didn't want to enter the trade only upon a nice confirmation of this fair value gap getting rejected. So that was happening right here. We got a rejection of this fair value gap that was created after the breakout structure. So I entered right there. This ended up being a loss because I didn't take profits. This was a beautiful take profit target, but that's why I missed it. I really should just put my take profits in before entering the trade, because I don't do it. I don't know why. I'm really gonna focus on this next week, because I really need to set everything beforehand so that I don't make any decisions while in the trade, because we all know that it can have some emotional consequences. So yeah, good trade actually, but didn't take profits. The take profit was a sniper, and I went all the way back to my stop loss. So next trade was a win on Euro GBP. This was the same day, but on New York session. This was higher risk because I think this was a better setup. We had a switch in the market structure after I saw several good weak rejection of the imbalance on the hour 4 and an hourly strong displacement breakout structure. So basically this was a trade. Why I ended up taking this is because we had also a fair value gap right here, and basically the high time frame is king, right? And on the high time frame I saw a lot of rejections of this hour 4 fair value gap. So price action is king. I expected a market structure shift happening there, and this is exactly what happened. So we had a double sweep, and it ended up being a 2.93 R winner trade. So basically here was the hour 4 fair value gap. We got 1 sweep, 2 sweep, 3 sweeps right here inside that hour 4 fair value gap, and this is where the valid market structure shift happened. You see a lot of volume displacement. I really like to play some market entries right there, because I'm not gonna wait for any retest if the low is in. So basically here's where I entered, and then this original consolidation is where I took profit. So this is actually a beautiful market maker buy model playing out right here. We're building up a lot of buy side liquidity here. This is the original consolidation. This is the hour 4 fair value gap shift that happened. Sweep, displacement, beautiful trade. And yeah, with the tight invalidation, because I don't want to see it all the way come back right here if we have that momentum. Then the next trade was a loss. Let's see why. It was a GBP USD trade on Tuesday on New York session. Hour 4 was bearish, and fair value gap equilibrium was still not mitigated. So let's look at this. Yeah, so basically just this is pure following the bearish order flow. This is the range we're playing with. We've tapped inside the premium above this order block range. Look at these wicks. Just wicks tell so much on price action. This just looks very weak. And once I saw some sweeps right here and this bearish candle, I market entered right there, not waiting really for the confirmation, because actually this is the low that we need to break. But actually this is still a beautiful trade, because if we break this low right here, you see we displace, and then we come back all the way towards this fair value gap before taking further internal liquidity right here. So good trade, but I can't really target external liquidity, yes, for my TP2, but I really should take profits right there on the internal key levels like a fair value gap, some sell side liquidity. So this is the the tip for the next trade. If I'm taking this, really just take profits along the way, set stop loss to break even immediately. Other than that, I think this was just horrible price action afterwards, because like you see again another sweep and another sweep, and only then we go lower. So I'm not really liking this price action, but hey, still a nice trade maybe. So the last trade I took was the winner trade, a very good trade. I over risked on this because this was a good trade. So I think you can over risk and just re-enter trades if the trade bias is still valid, and if you really like the setup. There are a lot of good confluences. It's really following the bias, and basically it's just an A+ setup. So that's what happened right here. I explained this on my Instagram, this whole trade, but let's just go quickly over it. We had an hour 4 fair value gap right here. We made a beautiful sweep on New York Open. So this is why time is also very important. This is exactly when the stock market opens, and we got a sweep of this low. We got a valid candle right here. You see this bullish candle. This is really indicating that, okay, we build up a lot of buy side liquidity right here, and now it's the time to take it out, right? So sweep, displacement, SMT with GBP/USD, because GBP/USD made a higher low right here and a lower low right there. So very good confluences, and so basically we had another opportunity to enter right here, because I didn't take profit right here. I was like, oh no, this is gonna go all the way back towards my stop loss, and so basically I put my stop loss break even, and I got stopped out on break even, and I re-entered because this was just looking so beautiful, because we actually just tapped the fair value gap right here, and we made a lower low on GBP/USD and a higher low on EU. So this was basically like a confirmed market structure shift if we make a higher low right here. So if I saw that rejection, I immediately market entered right there, which just targets on the next swing high. So this is what happened. Beautiful trade. Really just a market maker model, a market maker buy model. So yeah, these were all the trades I took. I have a lot of notes on these trades, but what it basically comes down to, what my reflection is of this week, is just follow the high time frame. This is really what made me some good trades, like the hour 1, the hour 4, just the wicks, the price action. It tells you everything, and just following the trend, following the order flow, following the nice price action on the higher time frame will tell you so much. Just really the overlapping of time frames, so constantly switching between the minute 5 and the minute 15 for confirmations, switching between hour 4 and hour 1 for point of interest, for like signs of weakness, just like really just using all time frames to know what's going on, right? And also what I noticed this week is that I really like to play on market entry, so I don't want to wait for a retest. Like, I'm not that kind of trader. If I see a nice point of interest rejection, if I see displacement, I just enter and target the next swing highs or swing lows. So that's what I really like. I really like found my own trading personality this week, I think, and also just something I really like to use is now the AMD concept. So there will always be, in my opinion, an accumulation, a manipulation, and distribution. I'm talking about a candle, I'm talking about ranges, I'm talking about price action. Just when a candle forms, it first forms some consolidation, then a manipulation, and then some distribution, and that's forming the candle, right? This is really something that would put me out of the trade too soon, because I saw some candles that were just not in my favor, but they were not formed, and they were just in their manipulation phase, right? And so after they were formed, they looked good, but I closed trades because they were still not formed and they looked not in my favor. So that's also something I should keep in mind. Only look at candles if they are formed. Trust the accumulation, manipulation, and distribution phase. Follow the high time frame. Follow the bearish order flow. Preferably only take market entries if the market looks primed to reverse. So yeah, that's basically my main key points. I hope you learned anything from this video. And yeah, I'll see you guys in the next one. Peace.